All right, well, welcome everybody. Paching, we're now on air for Trading Week Ahead. This is Ken Calhoun, your host, coming at you live straight out of Colorado Springs in the good old US of A on September 12th, 2015. Really excited to share with you some new strategies for our current markets. You do not want to be trading these volatile markets alone. We have an uncertain wedge forming in the S&P, and it'll be interesting to see if that breaks down next week or if it flips to the upside. Either way, you want to be prepared with a box trading range, and I'll give you the specific support and resistance triggers for the S&P coming up in just a few minutes. But first, just a reminder that we make no buy, sell, or hold recommendations. By watching this, you agree not to make actual trades. All information is for educational use only. Our quote of the week, it's especially valid for our current markets, from the world's top football coach Vince Lombardi, said, "Winners never quit and quitters never win." There's also kind of a point of diminishing return where you don't want to knock your head against the market and take lots of stops. So make sure that you're prepared with professional grade training from people like me and my colleagues who are industry professionals and not all these internet marketers out there. One thing I want to encourage you to do is target your trades with a much greater degree of focus and accuracy in our current markets. This is a trader's market, make no mistake, but it's a professional trader's market from people like me who actually prove we trade with real money P&Ls. These are my actual trades from September 1st, where I was selling the inverse ETFs for a healthy profit. I made thousands of dollars last Tuesday, as well, September 1st, on the sells and on the 2nd as well. Anyway, one of the things you want to do is, I even put on my Twitter feed, if you're not yet one of my followers, we're now to over 5,000, which isn't the same as a pop star or something, but I'll take it. We got over 5,000 followers on my Twitter feed. I correctly called what turned out to be the exact top of the inverse ETFs on September 1st, right before the closing bell, right? If you look at the VXX on September 1st, I posted on my live Twitter feed, that's a good place to sell. That turned out to be the exact 15-day top of the mountain, right? Nailed the exact top within 5 minutes of the exact 15-day top. So that's kind of pretty good performance, eh? I've been doing this for a lot of years, and my goal is to help get you there as quickly as possible as well. You know, I don't know about y'all, but I like making money in my trades. These are real money trades I made, and I like making money. The more the better. The more the merrier. Let's quickly take a look at our schedule, and then we'll jump into the charts. Last week we did Trading the Open Tuesday, Wednesday, Thursday. We have swing scans coming up today in about 26 minutes. And welcome to all of my new swing scan subscribers as well. That's ideal for stock and ETF swing traders. If you're a day and swing trader and want more coverage and more in-depth Q&A and live market time, be sure to join both. But Trading the Open's my live room. Swing scans is for stock swing traders. Next week we got a busy schedule. Yes, this should be on top here. We got Stock Trading Success System Owners webinar is coming up Monday night, the day after tomorrow, from 8 to 9 Eastern. All my Breakout Mastery members, we've got an upcoming special highlight session coming up Wednesday from 8 to 9. And of course the live room Tuesday, Wednesday, Thursday morning as well. So we've got a lot going on. Breakout Mastery is Wednesday. We've got Stock Trading Success Monday. And we've got the live room Tuesday, Wednesday, Thursday. So quite the hectic week. Stock market's selling off. Oh no, what are we going to do? I don't know about you, but I want to make money. Boom, and I have. Hey, if you get a chance, come and see me live in Las Vegas. Mastering your entries and exits, insider tips. That'll be Friday, October 16th. We're going to have a big turnout at this show, so make sure you make it. You may see me in this month's Stocks and Commodities magazine with the Gap Continuation Breakouts article. I'll also be in next month's Stocks and Commodities, and the month after, etc., etc. Really popular articles. Thanks to all of you for making them some of the more popular articles around. Great to see so many of you there. Also, for pivots, be sure to take a look at my July 2015 feature article in Stocks and Commodities for trading with price action pivots. Anyway, let's get on with it. Get on with it, Ken. What are the numbers? Here's your numbers. For the S&P for the week ahead, analysis is we have a downtrending pennant pattern. And that usually leads to a spike in trend, which means next week we may get a nice drop and a bounce to support and a pivot. Or if we get a long move, it may move only as far, I would forecast from a price action bounce standpoint only up to that 50 moving average line, which is around 2040 in the S&P. So 2040 major resistance, 1860 major support. If we get a breakout out of that pennant, it's likely to flip in one of those two directions, like a box trading range exceptional trade approach. For my short triggers, I want to use a relatively tight one here. What do I have? I have 1892 as S1. So I'm being a little conservative. I want us to stay clear of the choppy zone. 1892 is S1, and I put in 2008 is R1. So I want us to, at least what I'm going to do, I'm not going to trade much during choppy days if the market just continues to grind sideways within a narrow trading range. I want to trade exceptionally strong breakouts or breakdowns, preferably big market selling next week if this pennant flips to the downside. It's kind of a toss-up as to what it'll do. Big picture, we're in a downtrend, so the odds are it'll keep going down. But be ready to trade a bounce if it flips into the pivot up here. Just don't I'm not going to initiate new trades if we get up to the 50 moving average line. I will have been in long and I will be scaling out as we get to that 50 MA. But once we approach that, it's kind of like a logarithmic curve. I used to be a corporate statistician, so I'm a numbers guy and chart guy. You'll often see a stall or a pivot or a drop. That would be a good time to sell into the buyers before they take it back from you. Okay, just like in that VXX trade I did last week, or the week before, I sold up here into the gap up before the sellers wore it back down to near my cost basis, right? This is a market in which you want to take early profits and be out of your trades quickly to lock in gains before the market takes it back. This is not a trending market. You do not get 2 week trends to screw around, or pardon my French, play around with. You got maybe 3 to 5 days to make your play, take your money and run, like hitting a bank robbery or something. You go and not that we would do that, but I watch a lot of action movies. I watch Person of Interest lately, and Jackie Chan and Owen Wilson in Shanghai Noon, which is good. And I was watching the Fast and Furious movies with Vin Diesel, all kind of fun stuff to watch this past week. And Murdoch Mysteries from the turn of the century in Canada. Anyway, it's a hit and run market. So if you're a swing trader, I want you to think about round trips no more than 3 days. 5 days if you're pushing it, but that's as far as things are likely to trend before they don't. For example, last week, let's take a look at some charts. Last week and the week before, in these live trading week ahead sessions, I said long best buy, right? BBY, the ticker. Had you listened to me, you'd be up quite a few points. It ran from 33 to 38. Nice respectable breakout. Yesterday's got a nice wide range up, and we're at a 2-day high on decent volume. So they are buying this in spite of a selling market. You may want to pay attention to best buy as well. Other ones to pay attention to for the week ahead, let's take a look at our swing traders chart. HRB, okay, HRB. What I like about it is a gap up and a continuous uptrend in spite of a market wedge or pennant pattern. So we've got an uptrend continuation with slight buying pressure continuing on up. Another one, LCI. This did my classic, and as I published in equities.com, a 1-2-3 pattern. You've got a gap up, a move up. Whenever you see a sharp move up or a big gap up that then starts to drop, it'll often find support at around the 50% watermark or 50% retracement line and then resume its initial uptrend. That's what I call a 1-2-3 pattern. Anyway, 1-2-3 patterns. So when you see this as a trader, when you see a sharp move up or a very sharp gap up that then starts to retrace, look for support near the 50% line, and you can initiate a pivot trade if you see signs of strength, right? If it does pivot. Don't guess at a pivot. You know, there was no hammer or other bullish pattern from a candlestick standpoint here, but that was a good price action 50% pivot. There's a hammer there, but it kept selling down. So we did see a move up here several points on a 1-2-3 pattern in LCI. So that's one to pay attention to as well. Best Buy I told you about for the last 3 weeks. If you'd been getting in on this, you're up $5. Not too shabby, eh? You could see why I've got 3,600 people registered for my Saturday events, and my competitors, they try and get a bunch of them together and copy my Saturday webinar idea, which I've been doing for the last 14 years, and I'm sure they don't even get near this number. So you're in the right place. Let's keep it short, sweet, and focused. For day traders, You wacky day traders, you know who you are. We nailed it short in Lululemon for my traders last Thursday. LU, one good chart to keep on the radar for intraday trades. FireEye is also one that's exhibited really good intraday volatility, FEYE. There's quite a few others, and you can take a look at what those are on the Trading Alerts performance link here. That's a PDF of all my alerts from last week, Tuesday, Wednesday, Thursday, or all the ones that we tracked, at least Tuesday, Wednesday, Thursday. The members get an Excel spreadsheet, which is much better than just a static PDF, but at least you guys get a PDF, so you can take a look. And if you're not yet a member of Trading the Open, try it out for a month. You can see why our subscriber numbers continue to be rockstar. We continue to roll on up. We're not looking at over trading stupid E-minis or trying to scalp $6 crappy stocks. We like instruments that actually have some juice to them, that are actually likely to run anywhere from 30 to 80 cents in a single directional move. So try Trading the Open if you're not yet a member of that. Okay, what else do we have going on? For our E-mini traders, I called the short into the drop on that session on Wednesday. We nailed that out of the park. For the upcoming week ahead, what do we have? Well, we've got a downtrending E-mini, right? This is a selling chart, descending triangle. I'm going to go short under the lower Bollinger Band low. My S1 is 1922, okay? S1 on the ES, the E-mini futures contract is 1922. So we go short if it goes under 1922. Again, not a trading recommendation. It's just my own support resistance educational levels. But anyway, I'll be looking to short it down at 1922, long if we get over 1968. And the reason for that is that's right above this upper Bollinger Band, right? Which coincides with the price action high, so that's double confirmation, 1968, and that's right above this cut pattern. And I teach how to do that at eminiuniversity.com with my E-mini Inferno popular course. But anyway, be that as it may, we've got a bear cut breakdown. I wouldn't want to go long unless we recover that over 1968, and that makes sense. Now let's take a quick look at our Forex charts, and then if any of you have any really quick questions, I will endeavor to answer those for you. Now, this is not the kind of market that you want to be trading on your own. Don't trade these markets all on your own and try and guess. You know, it's kind of like, where's the clip art I put together today? You want to target more winning trades. If you throw darts at the markets, you may well take, as many stops as you do wins, and then you just worked a lot for nothing. What you want to do is be much more focused and have a much higher percentage of win rate by looking at intraday and swing trading volatility patterns that work out more consistently. And to do that, you have to learn from someone like me who is actually a real working trader, not these hoo-ha guys who talk about crap on their webinars and can't prove they trade. If they can't prove they trade, it's just a charade. Don't trust any of these educators. Throw them out the door if they, just stop buying anything from anybody that can't prove they trade. Why would you trust anybody who just talks about charts? You got to talk to a guy who knows how to extract money out of the markets. That's what we're here for. I mean, unless you want to be a chart analyst and being an analyst is your goal in life, then yeah, you can look at these theoretical dum-dums who talk about charts. But you want to learn the mechanics of how to really trade, you got to go to a real trader, and that would be me. So I hope that helps. Let's take a look at our Forex charts. What's hot lately? Well, the euro's kicking the US dollar's rear end, right? We're up to previous resistance. We're going to go 30 pips over the high for a potential long. The euro dollar did a pretty nice breakout, lifted its head up sharply yesterday. So if the euro takes out new highs up there, maybe worth taking a shot at if the buying strength continues. We've had a full week of net buying strength and kind of an inverse head and shoulders here, right? Just saw that just a second ago. It's kind of left shoulder, head, right shoulder, broke out to the new highs. I still want to be a skeptic since we're here. Everyone who's long down there is going to be selling to you guys up here, so you don't want to go in long here. You want to do what institutional traders do is wait until you got breakout confirmation for a new length of run or a new breakout continuation cycle that stays away from a false breakout. So intelligently, with a great degree of focus and precision and accuracy and intelligent step-by-step entry and exit mechanics, you need to map out a trading plan that makes you money. And to do that, you need to understand the patterns that work versus all the ones that don't. So that's where I come in. So Let's take a look. The other one is the euro yen. That was the other one on my list here. The euro yen has had an especially strong uptrend continuation, and of the two charts, I like this one better because it's broken to new highs. And we have a whole week of nice 45-degree angle breakout continuation, even a minor gap here, continue to run on up. So we'll see if that euro yen continues to move up. Those are the two best charts, the euro yen and the euro against the US dollar. So keep an eye on those if you're a Forex trader. And if you don't yet have, there's the link to that. It's in here somewhere. If you want to learn how to trade currencies, which is probably a good idea, given that the broad stock market's likely to do the mother of all nosedives anytime now. Boom. You may want to add Forex to your mix of what you swing trade, because no big gaps, and it's a continuous market and all that kind of stuff. So anyway, learn how to trade Forex with the Forex Success Mastery System. I believe over an hour of preview video clips there for you to look at as well, so you can see what the system's all about and get a preview before you purchase it. So give that some thought. What else do we have going on? TVIX for our ETF traders. One of the things that you may want to pay attention to is, now I sold September 1st with proof, which is good. You know, it's kind of nice. I'm an expert at trading the inverse ETFs. I've been trading them since before the flash crash. I was even, funny story, I was day trading the inverse ETFs on the flash crash day, correctly winning. I made thousands of dollars on that day, and I had a phone call scheduled with Steve Nissen later that day on the phone. I was talking with Steve, and he's going, "Hey, quiet day in the market, eh?" And we had a chuckle out of that, because yeah, big huge day. I profited from it because I traded the inverse ETF. This is a really good volatile instrument. Caution, you know, not for new traders because of the extreme volatility. This thing over doubled in the last few weeks, and look where it was earlier this year. The last time the market sold off, the TVIX ran all the way up to $60 a share. Now it's down at 16. That's my number one play, is going long in these inverse ETFs if and when the market continues to drop. It looks like it is, right? All the institutional guys have put their money in. They put their money where their mouth is. Look at 1 year high volume. Somebody knows something, right? I always like to follow the institutional smart money plays. You know, the best people out there with the largest volume and the largest money they can spend on their trades, who do this for a living and have done it for years, are the people to follow. So we don't want to take a speculative long yet, but if we do take out new highs in instruments like TVIX, likely worth a shot, big picture strategically. You could see my article that I published in equities.com back in July saying the market's about to sell off, and I was right. About 6 weeks early, but I was right. And if you took that bet, I even marked out that UVXY chart and said, this is a long if it breaks over the major moving averages. I posted that article, which you can see time-stamped on equities.com. Back here, late August, I said this would be a long if we break over the 50 and 100 moving average lines. So anybody who listened to my advice could have potentially easily doubled their money, right? Like I made a big profit trading this correctly because I was long down here and sold here, and I'm going to rebuy into strength up there. So play it smart. Make some money out there. And make sure you're learning from people who actually trade. I think that's kind of important. That's why my numbers are so good here. So thanks everybody for making it a success. It's really a thrill to see so many of you here. Thanks for being here. You know, the money's there to be made if you're on the right side of it. Just make sure that you figure this stuff out and you learn from people who actually know what they're doing, because that makes a difference. All right, I'm going to quit here. I want to thank all of you for being here.